Barry.
Hello, everyone, and welcome to Money Matters with Shannon Jackson, personal finance show focused on moving you forward financially. On today's show, it is tax time. The 2023 tax filing year is underway. Canada Revenue Agency started accepting returns on February the 20th. And if you're in the process of preparing your taxes, we have some advice to ensure that you're getting your best return. Joining me now with tax tips you need to know about, we have Paul Murphy, Senior Communications Advisor for the Ontario region at Canada Revenue Agency. Paul, welcome to the show.
Hi, Shannon. Thanks for having me.
So let's just go right into it and start with the basics. Who needs to be filing an income tax return?
Okay, that's a really good question. I mean, there's a category of taxpayer who you have to file, you must file. So if you owe taxes, you have to file a tax return. That's the basic rule. There are other requirements under the income tax legislation where you have to file, for example, if you sell capital property in the year, you have to file a return. If you're participating in the home buyers plan, the lifelong learning plan. So there are other qualifications that will require you to file, but people who should file a tax return are people who are owed a refund from the government or are entitled to benefits or credits like the Canada Child Benefit, the quarterly GST, HST credit. The list goes on, but all those kind of benefits and like the guaranteed income supplement for seniors, you have to get your tax return into us if you want to keep receiving those benefits, because if you don't, they can be interrupted and then it'll take some time to get them back to you.
Now, what about the married people, common law people, about income tax splitting? What about those situations?
Okay, yeah. So the situation with if you're married or living common law, you both need to file for benefit purposes, like the Canada Child Benefit. If one of you doesn't file, you'll get your payments interrupted. And then if you want to, if you're a senior and you're entitled to split your pension income, which is something we can go into the details about, but you both have to file your return if you want to take advantage of that particular provision of the tax legislation.
And I think there's also some important claims that you can sort of claim on your taxes, tuition fees and things like that. Mm-hmm. What if we withdrew from our RRSPs? What about those situations?
Yeah, you should file a return to account for those types of situations. If you've made an RSP withdrawal, that's taxable income. So you have to report that. The financial institution will withhold tax at source on that, but it may not cover your entire tax liability. Often, if it's under a certain dollar value, they'll only withhold 10%. So you'll still need to file your return, report that income, and pay the tax on it.
I often have people explain to me that they feel that if they didn't earn any income in the tax year, that they don't need to file a return. Do you have any advice on that?
Again, you should file a return, even if you don't have taxes to pay or if you have no income to report, for the purpose of being entitled to all of these credits and benefits like the Canada Child Benefit. The Climate Action Incentive, I want to just say briefly about that. That's what people commonly refer to as the carbon tax rebate. In Ontario, you're entitled to receive that just by filing a tax return. It's not based on your income. So you should get that return into us as soon as possible. And this year, I just want to point out that the April 14th Climate Action Incentive payment is based on your 2022 tax return being on file with us. So if it's not in with us by middle of March, you may miss that payment. We will catch you up later on when you file your return, but that April 14th payment, you have to get your return into us early.
Okay, that's good to know. And what about those who are Aboriginal or First Nations? Are they required to file an income tax return?
It depends on what their source of income is and where they exercise their employment duties. If they're working off reserve, then they don't tend to qualify for the exemption on the Section 87 of the Indian Act exemptions. So they should file a return, again, for all the reasons that I've just been enumerating. And even if their income is exempt, then again, those benefits that are tied to the federal tax return, they should file to be able to receive them.
That's great information. So next, what kind of paperwork do people need in order to file their income tax return?
Good question. I mean, this time of year, coming up to February the 28th, you're going to start seeing your T4 slips, your T5 slips if you have investment income, T3 trust slips. They come out a little later, typically towards the middle of April. So you have to get all your slips in order. That's the bottom line for your paperwork. If you're missing a slip, you still need to report your income. Try to track it down from your employer. And if you are in a pinch, you can always estimate your income based on like a pay stub and report it based on your estimation. So get that paperwork together. If you're self-employed, make sure you have all of your documentation, your invoices and your receipts. And if you're claiming deductions and credits, make sure you've got that backed up. So medical expenses, make sure you've got your receipts, your RSP contribution receipt, and then all of that kind of documentation. That's the basic paperwork you need to get together.
And what are the deadlines for filing our 2022 return this year? And how important is it to meet those deadlines?
Yeah, the normal deadline is April the 30th, but this year that's a Sunday. So you've got until Monday, May the 1st to file your return. And if you're self-employed or your spouse or common law partner is self-employed, you've got a bit of extra time, June the 15th. But it's important to get that return into us by the deadline. Even if you can't pay all of your taxes, if you have taxes owing, you still need to get your return in by the deadline to avoid a late filing penalty. And those start out at 5% of your outstanding balance. And there's additional 1% per month to a maximum of 12 months. So you can potentially get a 17% late filing penalty. You want to avoid that at all costs.
And I think too, the importance of filing on time is you don't want to interrupt those really important tax credits, maybe that you're receiving, like the Canada Child Benefit and things like that. So it's also really important to file everything on time. So how can a tax return be filed with Canada Revenue Agency?
There are a lot of methods available to you. We always recommend using a digital option. So the net file service that we provide through our website, you can go online and check to see what kind of certified software is available. You can also use some web-based services. So that's the basic option that's available to you. If you find filing taxes a bit complex and you don't want to use the software, there are other services. You can go to a professional tax preparer. You can also take advantage if you have modest income and a simple tax situation. There are free tax clinics available through the Community Volunteer Income Tax Program. So you can take advantage of that if there's tax clinics in your neighborhood. You can check our website to see what is available, or you can just give us a call to see what's in your neighborhood, in your area. And then if you want, you can still file by paper. It's getting diminishingly an option. The 92% of Canadians filed electronically last year, either by themselves or through a tax professional. But there still is that 8% of people who prefer the paper method, and we still accept them. We don't want to leave anybody behind. So we will process your paper return.
I wasn't sure about that because I know we're all leaning towards using the electronic services. So it's good to know that CRA is still receiving or is able to receive paper returns. So that's great. Now,
Absolutely.
when it comes to filing our taxes, we're all hoping for the same thing, of course, and that is not having to owe, and getting a refund is even better. Now, deductions and credits can help with this, which is why it's so important to understand the difference between the two and what we can and cannot claim. So let's talk about that just for a little bit. What's the difference between deductions and credits on our tax return?
Sure. So a deduction is claimed against your taxable income. You reduce your income that you pay tax on. So for example, you have $40,000 worth of employment income. You put $5,000 into an RSP, claim that deduction. So you're going to have $35,000 of taxable income that you're going to then calculate your taxes on. Now, a credit is something that you claim against your tax payable to reduce the taxes. Once you've already figured out what the tax rate is and what tax bracket you're in, then you can reduce your tax through non-refundable credits, such as the medical expenses, the tuition amount. There's a whole range of credits that are available to you. So that's the basic distinction.
And can you give a few more examples of some deductions or credits that can or cannot be claimed?
Sure, like common deductions, apart from the RSPs that I mentioned, your registered pension plan, childcare expenses, moving expenses, union and professional dues. Those are some of the more common deductions available. And then on the credit side, you've got the age amount for seniors, pension income amount, spouse or common law partner amount. If you've got a spouse who's under a certain threshold of income, there's the amount for eligible dependent. If you're single and you have a child, that's one of the most common on there. And then you've got, like I said, the medical expenses are very common.
And charitable donations, I believe, is that true?
Absolutely. Charitable donations, that's an important one.
Okay. And so what are some of the common mistakes that people make when they're filing that can impact their tax return?
Yeah, one of the common mistakes is I kind of alluded to earlier is if you don't report a slip, if you don't keep track of all of your information slips and you miss one, that's a common mistake. And we run programs to catch up with you down the road. So you end up having to receive a notice of reassessment because you forgot a T5 or failed to report a T4. So that's an important mistake to avoid. Another common mistake is not keeping your information up to date with the CRA. So if you move, or if you change your direct deposit banking information, or if your marital status changes, you need to let us know right away, because it can cause complications down the road. If we send a piece of mail out to the wrong address, or if you get married or get separated and your credits are based on that situation, you may end up having to pay money back. So that's important to avoid that common mistake.
And what about maybe claiming some expenses that aren't correct? Is that a common mistake that happens?
Yeah, so that's a broad category of what we call personal expenses. So like your wedding expenses or funeral expenses, or if you buy a uniform for work. These are things you're not able to claim. So you have to make sure that they actually are valid expenses. Typical medical expense that people think they might be able to claim, but they can't, or are over-the-counter medications, low-dose aspirin or vitamins that your doctor says you should take, but they're not dispensed by a pharmacist. You're not able to claim those. Those are personal expenses.
Okay, so we have a short amount of time before our break. Are there any new things about filing our taxes that we should know about for this year?
Yeah, there are a couple of new items on the tax return that I can talk about briefly. There's been an enhancement to a couple of credits. The home accessibility credit has been doubled, and the first-time home buyers credit has been doubled. So that's new this year. Individuals with type 1 diabetes are automatically considered eligible now for the disability amount because they are considered to require life-sustaining therapy. So that's new this year. And then there's a new labor mobility deduction for individuals in the trade of construction. If they have to temporarily relocate for work, they're allowed to claim some of their expenses against their income. That's something new this year as well.
Okay, that's really good information. And I know as we move into break, one question that maybe a lot of people struggle with is, should we file our taxes ourselves or should we hire a professional? And we're going to talk about that after the break. We also have some advice for those of you who may owe CRA and maybe you're unable to pay the amount in full. So we'll be right back after this break.
This program is brought to you by Ignite TV. Now you're in command. Visit rock.com for details.
With clubs, leagues, and courts in every province and territory across Canada, squash is the sport for wall-to-wall fun, fitness, and friendship. From coast to coast to coast. Learn to play and you'll want to do it every day. Squash. Play inside the box.
back to Money Matters with Shannon Jackson. My guest today is Paul Murphy, Senior Communications Advisor for the Ontario region at Canada Revenue Agency. And it is tax season, and we are offering up some tips to help you file your 2022 tax return. And filing a return is a simple process for some, but for others, it can be very intimidating. So, Paul, when should we consider reaching out to a professional, and what is the difference between a tax preparer and an accountant?
The latter question, that's an interesting one that you may be more qualified than me to answer, but really like a tax preparer, an accountant can be a tax preparer. They can prepare corporate returns, GST returns, what have you. But really, an accountant is involved in more complex situations involving analysis and providing advice, this planning. Those are more activities that an accountant will provide, whereas a tax preparer is filling out the tax forms for you. Now, when will you need to turn to a tax professional? Well, it depends on your personal circumstances and your familiarity and comfort with the tax system. If you have a really complex situation that involves, say, self-employment income, that with income from multiple sources, income that's earned in different provinces, where you get into a multiple jurisdiction situation, or if you're an executor of an estate, for example, that has like a lot of assets and a lot of income sources, and you're trying to file the final tax return, that can get fairly complex. So you may want to turn to a professional assistance for those purposes. But if you're just starting out, and this is something I like to point out for newcomers and first-time filers, we have a course online called Learning About Taxes. You can go to canada.ca/taxes and type in Learning About Taxes. And there's a bunch of modules online that will walk you through the entire process of how you're starting with your pay stub and then going to your T1 tax return and all those options. They're all available to you.
That's excellent to know that there is resources out there to help us just to have that basic knowledge of what our tax return does, maybe how to file it, what you need. So that's really good information. With the difference between the tax preparer and the accountant, I completely agree with you. A tax preparer will really prepare your return for you based on the information that you provide to them. Whereas an accountant can provide you that sort of extra advice if there's any extra tax planning maybe that you're doing as well. They can give you that more in-depth advice as you move forward. So that's really good information. So let's move into focusing on some advice for our self-employed viewers. And as we know, there's more and more Canadians who are self-employed now, more than ever before. So what do those who are self-employed, or maybe those who are employed but maybe have a side hustle, what do they need to consider when it comes to filing their taxes?
Yeah, that's a good question to ask me, because as you say, there's a lot of people now in the so-called gig economy, or working, like the ride sharing and the property sharing, those using the online platforms. You have to report your income. This is the bottom line, and you have to keep a track of all of your sources of income. You're able to claim a lot of deductions and expenses as a self-employed person. So you need to sort of familiarize yourself with what common deductions there are available to you. Anything, expenses that you incur in order to earn your income. The broad category of expenses are available, like your insurance claims, your home office expenses, your automobile expenses. Those are sort of some of the more common ones. There's also the capital expenses. So if you're running a restaurant and you have to buy a dishwasher and a new freezer and so on, these are large dollar expenses that you can claim over time through what's called capital cost allowance. It's a very common claim for self-employed people.
Can you go into a little bit of detail about how to claim maybe those home expenses or motor vehicle expenses? How is that calculation done?
Yeah, it's important with expenses that you may use for personal as well as business use. So you have a motor vehicle that you're driving for business, but also for personal reasons. You have to make sure that you separate out what's personal and what's business, so that when you file your return, you should keep records, keep a log, for example, if you're driving, of what you're using your vehicle for. It's because you can't claim personal expenses against your income.
And what about CPP contributions?
That's a good one too. If you're self-employed, there's what's called a Schedule 8 that self-employed people have to pay CPP on their income, and they have to pay both the employer and the employee portion. So it's part of your final tax bill, and it's important that you make those contributions.
Can you talk a little bit about a possible HST obligation if you're self-employed?
Yeah, if you're selling goods and services as a self-employed person, you may be required to register for GST, HST, and collect and remit GST, HST from your customers. And the threshold is $30,000. If you have revenue exceeding $30,000 annually, then you'll be put in the category of being required to register and file the paperwork, the GST, HST returns.
Do you recommend that self-employed people have their returns prepared by a professional, a tax preparer, or an accountant?
Yeah, I mean, going back to what I was saying earlier, it just depends on the complexity of the situation and really how comfortable you are with tax filing. Tax filing, particularly as a self-employed person, can be time consuming because there's all sorts of aspects. There's not just the filing your T1 individual return. If you've incorporated your business, then there's the T2 tax return that's required. And then you've got your GST, and then you've got your payroll remittances that you have to take care of as well. So it just, as I said, it depends on how much comfort you have with the system. I want to throw in a plug though for a service that the CRA offers that's free. It's called the Liaison Officer Service. And basically, if you're starting out as a small business owner, you can give us a call and or you can go online to register, and you can make an appointment to speak with a CRA officer who will explain to you your tax obligations, who will answer your tax questions, and they may be able to take a look at your bookkeeping system to see how well set up you are as a business person. So that's an option available. And like I said, it's free and it's confidential, and it's there for the self-employed.
That's excellent to know. And I'm glad that resource is available, because self-employed people, it is, as you say, very daunting. It's very time consuming to keep track of your books and records. So it's great that there's a resource that they can reach out to. And of course, I think it's important to remember that we as the taxpayer are the ones that are solely responsible for our income tax returns and how they were filed, even if someone else has filed them on our behalf. Now, not everyone, of course, receives a refund at tax time in the spring. And of course, we know the only thing that's guaranteed in life is death and taxes. And so if you owe, what can people do if they've completed their return and they find out that they owe some money? What advice do you have for them?
Yeah, my advice off the top is to make sure you get your return into us on time so you don't have to pay a late filing penalty. And then if you can't afford to pay your balance in full by the deadline, which is May the 1st this year, file your return, get your notice of assessment, and then you can contact us. You can give us a call to talk about setting up a payment arrangement. That will be, we'll work with you to establish something that's mutually acceptable. There's tools online now through our My Account service, which is a whole other topic, but it's a great service on our website. You can go in there and set up a payment arrangement. This year, we've added a new payment arrangement calculator option through My Account. You can go in and then work with the computer to set something up that makes sense for you.
How important is it, if we owe money to CRA, that we communicate as opposed to maybe ignoring the issue?
It's extremely important. I know that it's something that comes up a lot. People don't want to open the envelope with the tax bill in it, and they leave it in a pile. But it's really important that you communicate with us, because what happens if you end up in the collector's inbox and the collections officer is trying to get a hold of you, and you're not communicating? The collections officer may be able to take legal actions against you. that will involve, freezing your bank account or putting a property lien on your house. So it's important that you don't ignore the calls and the letters. And we do, and I want to point this out too, is that we do call people. So don't automatically assume that every call from the CRA is a scam. There are legitimate reasons why we will call people, specifically around if you actually owe us money.
I'm going to come back to that part in a minute. Now, if we owe taxes, is there any interest payable on that amount?
Absolutely. There's arrears interest that gets charged from, May the 1st onwards. And there's a whole category of installments. If you owe more than $3,000 for consecutive years, you may be required to pay quarterly. And this goes back to the self-employed people as well, that if you have income where there's not a lot of tax or any tax withheld at source, you have to pay quarterly installments. And if you miss your installments, there can be installment interest on top of arrears interest or separate from arrears interest. So that's important to know.
That is really important to know. Going back to your comment that CRA might call you sometimes. Mm-hmm. How do we know when it's a legitimate call? Because we do hear a lot of news about fraudulent activity happening. So how do we know when CRA is contacting us?
Sure. I mean, there's some red flags when you know that it's not the CRA. That's off the top. If they start threatening to arrest you, or if they're requiring payment by anything other than, legitimate through a bank, if they want you to pay with a prepaid credit card or gift card or Bitcoin, I mean, that's not something that the CRA is ever going to ask you to do. So that's a red flag right away. Now, if you get a call from somebody saying, "Hi, I'm an officer from the CRA," and you're kind of suspicious, don't know that it's actually who they are, who they say they are, take down their name, ask them what their work office location is, take down their phone number, and then you can call our inquiry service, 1-800-959-8281, and say, "Hi, I just got a call from this person. Is this legitimate?" And we'll be able to confirm, based on our own internal diaries and so on. It's like, yeah, this person is trying to call you. So by all means, talk to that person.
Perfect. That's good to know. Do you have any final advice for our viewers when it comes to filing their taxes this spring?
Yeah, just make sure that you get your tax return in on time. There's all sorts of benefits and credits available. Like I said, the earlier, the better if you get your return to us, because like the climate action incentive is there coming out in April. There's another credit I forgot to mention a little earlier. I just want to tack on here because it's interesting and I think people will take advantage of it. It's the Ontario Staycation Credit. If you spent time in Ontario on vacation and paid for accommodation for a hotel, you can claim that on your tax return this year and get back some money.
Well, Paul, thank you so much for joining us on Money Matters today and sharing your advice for our viewers.
Yeah, thanks, Shannon.
And if anyone needs to reach out to Canada Revenue Agency, get some advice, how can they do that?
Okay, so the phone number is 1-800-959-8281. That's our contact center number. And they can also go online, canada.ca/taxes, and there's a whole wealth of information there.
Thank you so much again for being here. And I also want to thank our viewers for tuning in. Until next time, I'm Shannon Jackson.
Call the Rogers TV Viewer Response Line. Email us or connect with us on social media.
It's about sharing and caring.